Hi, this is Kripa Anand, and welcome to the She and Success podcast, powered by She and Success Business Magazine, a platform dedicated to spotlighting the voices, strategies, and journeys of women leaders and entrepreneurs who are shaping Canada's business and policy landscape. Today, we are discussing the democratization of the private markets. In 2026, the funding landscape has shifted. Startups are no longer solely dependent on traditional banks or VCs. Instead, they are turning to their own communities to build loyalty and secure the capital needed to scale. Joining us today is Trieste Reading, Chief Growth Officer at FrontFundr. An emerging leader in finance and investing, Trieste has facilitated over $300 million in capital for more than 250 raises. Her unique journey from investor to shareholder to executive gives her a 360-degree view of what drives capital today. She's here to talk about the future of private markets and how to move capital through community storytelling. So, before further ado, let's welcome this special guest. Trieste, welcome to the podcast. Such a pleasure to have you with us.
Wow, thank you so much for having me. I'm very excited to be here, and thank you for the incredible intro.
It was so well deserved. I can vouch for that. Now, Trieste FrontFundr has spent over a decade proving that early stage investment shouldn't be restricted to just the top 1% of wealthy individuals. So let's start the conversation by understanding why is it important for everyday investors to access private market opportunities in the first place?
Fantastic. Wonderful question. Historically, as you noted, the private markets have been largely inaccessible to everyday investors, even though that's where a significant portion of value creation happens before companies go public.
Mm-hmm.
Estimates suggest that roughly 75% of a company's value is created prior to an IPO, an initial public offering. We also know that over the last few years, companies have been staying private longer. So it raises the question, why shouldn't more people be able to participate in that stage
Mm-hmm.
of growth under the right conditions? So private investing opens access to companies earlier in their life cycle, often the same types of opportunities traditionally reserved for institutional investors and angels. These are businesses with high growth potential, but also higher risk, which is why access and education matter. But what often gets overlooked is the second layer, which is connection. This isn't just about financial returns. It's about being able to invest in companies that you actually believe in and whose
Mm-hmm.
products you already use. There's something powerful about walking into a store, using a product, or interacting with a platform and knowing you're also a co-owner in that journey. And that's
Yeah.
where my own experience actually started on the investor side. Studying abroad, I came across startup investing through a platform that allowed individuals to invest directly in early stage companies. And I was drawn to the idea immediately. I loved the thought of being able to be your own dragon, like on Dragon's Den.
Yeah.
But as a Canadian, internationally, I couldn't invest. So when I came back to Canada, that's where I found FrontFundr and I made my first investment in a Vancouver Island-based company. 2 years later, that company went public. And since then, I've built a portfolio across the private market. Some companies have succeeded, others haven't. But in every case, I've been able to support founders building something meaningful. And I've had
Yeah.
the opportunity to be a part of their growth journey in a very direct way. And so at its core, democratizing private markets is about two things: expanding access to wealth creation and expanding access to ownership in the companies shaping the future, which is really what excites me about it.
Wow, I love the way you articulated that answer, Trest. Opening these opportunities to the general public, it definitely creates a more equitable wealth building landscape, when it comes to all Canadians involved. So thank you so much for, sharing your perspective on that. Now, let's explore how strategic marketing frameworks help founders successfully raise capital. This is one of my favorite questions when I go to events. I usually ask this to the entrepreneurs who are also investors, that what is more difficult, building the product or convincing investors that your product is worth it? So, and uh, the reaction that I get is that this is the most difficult question that they, have to answer. So, building on that, Rest, I'd love for you to explain and, educate to our listeners what makes a founder's story powerful enough to attract investors in the first place.
Absolutely. And I love the way that you framed that question as well. I think a compelling founder story isn't just about inspiration, it's what creates connection and ultimately drives investment decisions.
Mm-hmm.
So the strongest campaigns clearly connect a few key things. It's a real problem, it's a uniquely positioned founder, a differentiated solution, a clear market opportunity and business model, as well as early proof that it's working. And how those elements are communicated is often just as important as what being said.
Mm-hmm.
Great storytelling certainly makes opportunities feel real. It helps investors quickly understand not just what you're building, but why it matters and why it matters now. When done well, it creates an emotional connection first and reinforces it with logic later. So for us, storytelling is so important that we actually launched our own podcast, From Funding to Fame, where we interview founders raising on our platform. It gives them the opportunity to go deeper than just the investment materials and really share the why behind what they're building, because at the end of the day, people invest in people. So I think coming back to really what makes an effective pitch there, it's a problem that needs to be tangible and relatable. Investors should be able to see themselves or someone they know experiencing it. That's what pulls them in. You don't necessarily need to have a product on the market yet, but you need to be solving a real problem. So second really is founder market fit needs to come through authentically. Why are you the right person to solve this? The
Mm-hmm.
most compelling stories are earned, not manufactured, and that authenticity helps build trust there. Third, really communicating clearly how you're solving this problem differently than everyone else. What's your unique advantage or insight, particularly in crowded markets? Differentiation is what turns that interest into belief. And then clearly communicating the market opportunity and business model. Even for something like equity crowdfunding, this is incredibly important. Storytelling gets the attention, but investors still need to understand the scale of the opportunity, how the business either is currently making money or intends to make money if they don't have products on the market yet. And
Mm-hmm.
that's really what turns that interest into conviction in the opportunity. And then lastly, I would say traction really validates the story, whether it's revenue, user growth, a wait list, partnership. These signals show that the narrative isn't just compelling, it's credible. So as I mentioned earlier, even if you don't have a product on the market yet, you can still do very well, but showing things like the size of the wait list that you have or what kind of feedback you've received thus far in early testing are really important elements to show investors what the future potential of the product is. And so where equity crowdfunding becomes especially powerful is when your customers are part of the story. The best founders don't just tell a story, they're inviting their community into it.
Yeah.
And that's when people see themselves reflected in your mission and they don't just support the brand, but they invest in its success.
Wow, very interesting take there. I completely agree with you, Trust. When a brand story resonates emotionally, the community doesn't just buy the product, right? They buy into the mission, and that is the
Yes.
end ultimate goal. That's great. Now, moving ahead, let's discuss how FrontFundr's rapid growth is expanding access to investment opportunities. Now, Trieste, what do recent fast fundraising campaigns reveal about the investor demand right now in the market?
Yeah, 2025 was a milestone year, not just for FrontFundr, but for equity crowdfunding in Canada in general. For some context on how FrontFundr operates, we're an exempt market dealer, so this means we can use multiple exemptions to help companies raise capital. So this includes the startup crowdfunding exemption 45110, as well as the offering memorandum exemption, as well as traditional accredited investor, friends, family, and business associates exemption. So all of those work together to help companies raise capital. So with that, of the 83.2 million in funds processed through FrontFundr in 2025, nearly 4.8 million of that was specifically through the equity crowdfunding exemption, and that actually represents a 180% increase over the previous year of 1.7 million in 2024. This was largely driven by three standout campaigns, but also consistently strong performance across the board from a number of companies on the platform. But a couple highlights I want to share. In 2025, we actually saw the first company in Canadian history reach the maximum 45-110 exemption limit of 1.5 million from retail investors with Edison Motors.
Wow.
They're a clean tech manufacturing company making electric hybrid work trucks. They went on to continue raising via other exemptions. So their rounds now over 7 million through FrontFundr specifically. But it was great to see that we have a company now reaching that maximum limit. We also saw the fastest raise in Canadian history with Blossom Social, a social app for investing, raising 1.93 million in just 6 hours, breaking their previous record of 3.5 days from the year
Oh
before.
my God.
incredible, right?
Yeah.
And lastly, we had a company at the pre-beta phase, so didn't have a product on the market yet, but they raised $2 million from over 2,500 investors with Gander Social, a Canadian social platform focused on privacy and digital sovereignty, showing the power of a 34,000 person waitlist. So this is where, when we mentioned earlier, you don't necessarily need to have the product on the market yet,
Yeah.
but you need to have kind of that product market fit and that early traction. And they did so with a huge waitlist. So really the unifying theme there across these record-breaking campaigns was community, whether it was a massive wait list for a product Canadians across the country wanted on the market, a huge social media fan club following each
Yeah.
company milestone, or one of the most engaged investor communities in North America. These companies are all building and maintaining deep relationships with their customers. And it's these individuals who are so excited to invest when the opportunity presents itself. And we also saw, with the support of the Buy Canadian movement in 2025, or as I like to say, the Invest Canadian movement that kind of goes hand in hand with
Uh-huh.
that. The demand has never been higher for Canadian companies that are solving real problems and driving real value for their communities. So I think what we're seeing is a structural shift in how capital is formed, with community becoming one of the most powerful drivers of fundraising success.
Trist, can I just take a moment to say how impressed I am? We at She and Success and Canadian SME, we are, extremely proud of everything that you have personally done, and FrontFundr, of course, for all the efforts to, support the Canadian ecosystem, because these numbers are not small, right? Um, Seeing such high velocity, in these raises, it just proves that community ownership is becoming a primary engine for Canadian innovation. On that note, before we go any further, here's a special message for all of our listeners, especially for all the founders watching. In 2026, your customers are your greatest untapped asset. If you are struggling to find a seat at the VC table, build your own table. Brands like Edison Motors and Grander Social have proven that when you give your community a piece of the pie, they become your most fierce advocates. So don't just look for a check, look for a community of 70,000 plus investors who believe in your why. The capital is out there. It's time to go and get it. Coming back to you, Trest, let's now, look at how evolving regulations are shaping the future of private markets in Canada. So I'd love for you to again, educate our listeners on what regulatory changes do you expect in Canada's private markets?
Yeah, fantastic question. I think, with democratizing access to the broader investor base, regulation is such an important part of that. And
Mhm.
while the democratization is critical, it needs to be done responsibly. So as innovation continues, I expect it'll be preceded by careful research, followed by ongoing monitoring to ensure both investor protection and market integrity. But from my perspective, there's three key areas that I'd like to see continued evolution. The first is really increasing the equity crowdfunding limit. So as we just touched on earlier, we're now actually seeing several companies reach the maximum exemption limit of 1.5 million, which signals strong demand, but also practical constraints on growth. In the US, companies can raise up to approximately 5 million USD over a 12-month period under the Jobs Act crowdfunding framework. That
Mhm.
higher threshold allows crowdfunding to function not just as an early stage tool, but as a meaningful part of growth stage financing. So increasing the limit in Canada would give scaling companies more flexibility and make it easier for later stage issuers to include their community in larger rounds. The second is improving tax benefits on the investor side. While Canada does have some examples of that, like the eligible business corporation tax credit in BC, which provides up to 30% refundable tax credit on eligible investments into improved companies. But these incentives are not consistent across the country, which creates uneven participation. So the UK offers actually a powerful benchmark through their seed enterprise investment scheme programs, which have unlocked over 63 billion in private capital across nearly 60,000 startups since 2012. So key insight is that these programs materially reduce downside risk, which is what drives broader participation in early stage investing. And actually, there's been a lot of talk about the private markets recently, even in the Globe and Mail through a few op-eds. So recently there was an op-ed talking about how we could apply these tax incentives to Canada. And they gave the example of, 100K investment in a pre-seed company following the UK model would receive a 50K tax credit. And then if the company fails, the remaining loss could be partially offset against income at the top marginal rate. So resulting in an additional 27,000 in tax relief. So in effect, the investor's net risk could reduce to roughly 23,000 while still maintaining full upside potential with no capital gains tax. So it's that kind of risk reward rebalancing that
Yeah.
what materially changes investor behaviors. So that's something that I think we could see a little more standardized across the country. And then the last thing is really more harmonization. So in 2021, the equity crowdfunding exemption 45-110 was introduced, and this harmonized the legislation across Canada. So individual exemption limits were consistent at a provincial and territory level, whereas previously they were all fragmented. However, we still have 13 different securities regulators, each with different kind of interpretations and approaches. So while the intent is consistent, the result is in some cases, added complexity for issuers and platforms. So greater coordination and a more unified approach would improve efficiency, reduce friction, and support national scale capital formation while maintaining strong investor protection. So overall, we've made real progress, and the opportunity ahead is to expand access without compromising trust. And if we do that well, it'll fundamentally reshape how capital is formed in Canada.
Wow, Tress, there were so many, small things that I'd wanted to stop you and, have a deeper conversation about,
Yeah.
because this episode is definitely not doing justice to, the deep conversation that we could be having around this. But I completely understand, modernizing these limits will be essential to keeping the Canadian startups competitive on the global stage. I'm loving this conversation, Twisty. And now let's shift the gears to the women's side of the conversation, right? We were having this discussion briefly before the episode started as well, that specifically in Canada, when we talk about the seat at the table, women have always struggled to, make it to the top. And now, what I personally say is that women don't need to find the seat at the table. They need to create their own tables and then decide who gets to sit on them, right? Building on that rest, how can women founders use equity crowdfunding to, overcome the specific funding barriers that they face?
Absolutely. I think you've been reading our mind. We use that same pull quote all the time that, for female founders, they can build their own table and invite anyone to it. But it's such an
Yeah.
important question. We're recording this episode in the same month as International Women's Day, and
Uh-huh.
recently wrote a blog post for the occasion, which talked about how women don't wait for a seat at the table, but they build their own
Oh.
with equity crowdfunding. And
Wow.
I think, it touches on important themes, as you noted. Women-led companies still only receive about 2.3% of traditional venture capital funding, despite the fact that, according to BCG, women-led companies often outperform their male-led peers, generating 78 cents in revenue for every dollar invested, compared to 31% for men. So study after study shows that women-led companies are a smart investment, yet investment trends over the past 5 years had not reflected much progress in this domain. So with equity crowdfunding, as you so eloquently noted earlier, female founders don't need to wait for that seat at the table. They
Uh-huh.
can build their own, and they're in charge of who gets invited to hear that pitch. So equity crowdfunding really gives female founders the ability to raise capital on their own terms by inviting investors who share their vision. What's great about it as well is that companies invite their biggest supporters to invest, whether it be their customers, partners, suppliers, social media followers. The people who actually use the product every day can also be the ones investing in the company. So for ourselves at FrontFundr, we've seen that women-led companies represent about 19% of our successfully funded campaigns, which is above the curve, but it still demonstrates that there's a lot more work to do to close the funding gap.
Mhm.
Um, and whether equity crowdfunding is the entire round or a complement to the traditional funding rounds, it really does give founders, and particularly female founders, a way to raise capital on their terms while building a shareholder base that's directly aligned with their mission and long-term success. I think the other thing to keep in mind here is the investor perspective. And we're also seeing the great wealth transfer currently happening, where women are set to inherit a majority of the wealth from the next generation. And so they're going to be in charge of a lot of capital moving forward. And that's where also thinking about it from the investor angle is we're going to have a lot more women considering investing and making, their own financial decisions and wanting to invest in the private markets and products that they use and founders that inspire them. So I'm hoping we'll really see kind of both sides of the market driving that growth and really having both decide that, they get to dictate their own futures and they can do
Yeah.
so on their own terms, which is nice.
You've painted quite a picture there, Trest. The future definitely looks, very exciting. And specifically with these stats on the projections around the women entrepreneurs in Canada, it excites me to a whole different level. Uh, and for what you said, crowdfunding, it bypasses the traditional gatekeepers and genuinely allows for founders to speak directly to the people who value their vision. So that is a great thing. Did I mention how much I'm loving this conversation, Tress? Because I'd love for you to be back with us for another episode. Maybe the next one, we could do in person, or maybe we could plan. I know you're in Vancouver right now. But for
Absolutely.
now, before we let you go, if there's one final piece of advice that you have for the founders who feel unready with crowdfunding, if you get to whisper that one thing into their ear right now, what would you say and why?
Yeah, absolutely. So we like to call equity crowdfunding community capital because community is at the heart of this form of funding. So most founders think they need to be ready in terms of revenue, scale, or traction, but in reality, the biggest determinant of success for this form of funding is community readiness, not company stage. So equity crowdfunding works best when there's already a group of people who care, whether that's customers, users, supporters who believe in what you're building. So the focus should be on timing the market perfectly. It should be building and engaging your audience early. If you're pre-product, start building a wait list and telling your story consistently. If you have a product in the market, double down on your customers, engage them, listen to them, and bring them along on the journey. The other key shift is mindset. Equity crowdfunding isn't just a financing event, it's a marketing and community activation strategy. So the most successful campaigns are a result of months of intentional audience building and communication. So instead of asking, are we ready to raise? The better question is, do we have a community that's ready to invest? I'll leave you with that.
Another great reminder that your community's belief in you is the most valuable backing you can have. Twist, it was such a pleasure having you on the podcast. Thank you so much for joining me and sharing your insights with us.
Thank you so much. Really enjoyed the conversation today.
All right, that was Trieste Reading from FrontFundr, a masterclass on how to democratize capital and turn your brand's community into its most powerful engine for growth. To all the listeners, thank you so much for tuning in to the She and Success podcast, powered by She and Success Business Magazine. Be sure to subscribe for more expert insights and visit sheandsuccess.ca for more resources. And lastly, a very special thank you to our exclusive shipping partner, Purolator, for their ongoing commitment to supporting women entrepreneurs and helping them build, grow, and lead successful businesses across Canada. I'll see you guys in the next episode. Kripa Anand signing off.